Welcome to the Rate Update with Dan Frio. I am Dan Frio, and today is October 20th, 2020. We're going to talk today about the rate comparisons that I do today are going to be in regards to a debt consolidation loan. And we have one particular client that we're working with right now that's saving or reducing their monthly expenses over $2,000 a month. I'm not making it up. I can't show you the actual numbers, but it's true. So when you get back, I'm going to go over what happened today with mortgage rates. Then we're going to go over our Tuesday rate comparison. We're going to compare debt consolidation loans. Don't go away. We'll be right back. Okay, guys, what we're going to talk about today is debt consolidation loans. There is a massive amount of equity sitting out there in people's homes. The unfortunate part is there's a massive amount of debt out there in consumer credit that people have with with interest rates that far exceed 10%. I see everyday mortgage statement or credit card statements coming in with 15, 18, 20, up to 25% interest rates on credit cards. So what I wanted to do today is compare my rates with debt consolidation loans out there, all right? And I want to kind of address the elephant in the room, basically, is a lot of feedback or a lot of pushback that we get from consumers is, why would I pay off that bill with a 30-year term? Well, I'm going to show you an example on why you would like to do that. And also, many people are making their minimum payments and they're racking up credit card debt. And why do you run up credit card debt? Unless you can pay it off monthly, why are you racking up those bills? Well, your expenses exceed your income. I'm not telling you anything you don't know, but basically that's the reason. So if we were to go in and say, let's consolidate all this credit into one payment. Now that payment, we drive down that payment, and let's say, for example, we can save you $1,000 a month. Now on that example though, we say, we'll send in $500 extra a month. Get it, we're cutting your monthly expenses by $1,000 a month. Send in an extra $500 a month, maybe $300 a month. The rest, hopefully, is offsetting your monthly deficiency. And again, why is your credit card bills continuing to increase? Again, you're spending more than your income is. So that's what I want to talk about today. So let's get on to basically the first thing is what happened with the market today and what do we see for this week. And then we're going to go over my rate comparison in regards to debt consolidation loans. So let's get to it. The first thing we're here is, and why people come to my channel every day, is we go over this number right here. This is what's happening in the mortgage-backed securities market. And that thus says right here, MBS. What the mortgage-backed securities market is doing. We got a lock alert this afternoon. There really wasn't any reason for it. I kind of disregarded it. At the point that the lock alert came in, we were down, this number was down 18 points. Since then, we basically recovered almost back to zero. Okay, so I don't know why they posted the alert. It's just because it was starting to become a bloodbath, and there was really no reason for the crash in this market. So let me explain to you what I'm talking about. This number right here is what's happening to the price of a mortgage-backed securities. And it's a bond that trades. Okay, so let me give you some ideas on how bonds work. When you buy a bond, basically what you're doing is, let's say I want to buy a bond that expires next year, a year from now. And that bond price at maturity is going to give me $100. Okay? So if I spend or I invest $50 today, and a year from now when it matures, I get back $100, I had a 100% rate of return. So that means that interest rate was 100% because I doubled my money. Let me make it a little more clear. Hopefully you get this point. Let's say, however, that again, it matures and I get $100 back. Let's say today I give you $100 and on maturity I get $100 back. What would be my rate of return? 0. Because I'm investing 100 and I'm getting 100 back. So do you see where I'm getting at? When I invest, the more I pay for that bond, the lower my yield or rate of return. So what we like is when the MBS number goes down or up. We love when it goes up, which this number would be green. We hate when it's going down because, again, remember when we paid $50 and we received $100 back? It was a 100% rate of return. So that rate would be 100%. Well, we want to pay a low rate, so we want the price to go up. That should make sense to you. So what happened today is MBSs were down 5, basically nothing. That's not enough to move the markets anyway, anyhow. All right. So let's go over now what's happening in the markets. So what I follow here is the trends. What I'm looking at is to see what's going on. What should tomorrow bring? I basically watch the news. I follow about 7 different indexes, freight indexes, the GDP, PPE, PMI, or not CPI, all these indicators that should kind of give me an idea on where rates are going. And also the stock market, what's happening in the government, what's happening with the stimulus packages and everything else. The news that came out today is there might be a stimulus package. Thus, the stock market went up and the bond markets came down. All right, but over time, this is basically what happened in the past quarter with this bond price. So what we follow here is a bunch of things. We follow the technicals. So those technicals are, you can see a line here, and a line here, and a line here, and a line down here. I don't know if you can see this one because I'm trying to zoom in so you can get a feel for what's going on. All these lines are what we call Fibonacci levels. This line right here is a long-term ceiling. This line right here is a short-term ceiling. This line right here is a short-term floor. This line right here is a long-term floor. So we're going to focus, we basically are going to focus short-term. So what should happen in a normal market, the price should bounce around through here, but not exceed or drop below these levels. All right, so we're teetering on the high end of this. Some other factors that we watch are these averages right here. And those are represented by a purple line, a black line, and a brown line. The purple line is a 100-day moving average. So if you averaged all these numbers over 100 days, you would be sitting at this chart right here. See how it's moving? On a 50-day moving average, you're right here, and you can follow it through, and you're right here. On a 25-day moving average, which is brown, you're right here. But if you follow it through, you're right here. So basically, it's consolidating right into this area right here, the 25-day and the 50-day moving average. That's where we should be trading, okay? Because there's really nothing going on in the market. The biggest impact that you're going to see on anything is what happens with the stimulus package, if it gets approved or not. All right. Right now we're trading below this, which means rates are higher than where I'm expecting them to be, as well as the market is expecting them to be. So that's why I'm not locking anybody, because we should be trending right about here. And again, the higher these numbers, the lower the rate. There's an inverse relationship. So that's what's going on right now. What's causing the stability in the market right now is the Federal Reserve is coming in and buying between 5 and 7 billion with a B in mortgage-backed securities every day to stabilize the markets. If you go back in time, you can see that the markets were crazy. And I'll show you back here. We're going to go back to a 6-month chart. Right now, I'm looking at I was just looking at the quarter. Look where we were down here. We were all the way down here at one point. Again, the higher this goes up, the lower rates are. So look where we're back in the middle of June. Rates have gone all the way up to here since that. That is a huge move. Huge. Okay, so that's the part of that. The next thing we're going to do is look at the economic calendar. There's some news that came out today, but nothing really should have shocked the market. That's why I was surprised when we came out with, or not we, the analysts came out with a lock suggestion about midday, and I'm like, there's no reason for it. I see the market stabilizing. China's rate decisions. China didn't move on their rates, though that's good for us as well. Building permits. Building permits were way up. That's good for the markets. Housing starts. We're a little bit down, but the building permits offset that. So we're all good there. So nothing there concerns me. Nothing really the rest of the week should really have an impact on anything either. All right? So that's what's going on there. Briefly, I go over this every day, what's happening with mortgage rates, and I'm going to go through this with you real quick, and then we're going to get on to our rate comparisons. The 30-year conforming rate today, on average throughout the country, is 2.86. That is a one-day delta or a one-day change of down 1 basis point. The jumbo rate, down 2 basis points from yesterday and even to where we were a week ago. FHAs are 2.99. That's 5 basis points higher than we were yesterday. VA 2.55, and that is no adjustments. Okay, over here in this range, this tells you where we were a year ago. And you can see it, 92, 88, 65 is a little deviation, but 80. We're almost 1 full % lower today than we were a year ago. So if you refinanced or bought your house a year ago, look at doing something because you're not into it that long. If you can reduce your cost to refinance, this could make a huge benefit in your pocket. Okay, so the next thing is, I Googled and I said, how long does it take to pay off a credit card? So this is what we want to talk about today. I want to talk about, again, you have credit card debt, and there's a reluctancy with people to say, I don't want to stretch my credit card bills out 30 years. I get it. My job isn't to put you in any more debt. It's to make it make sense, restructure it to make it make sense financially in your budgeting. Okay? So most people, and I'm just doing the masses, so you might be out there saying, Dan, I pay it off every month. God bless you. A lot of people, I see hundreds and thousands of applications a month. Probably 50% of the people out there with credit card debt are just making it. And if they pay their credit card bill, they might add an extra $50 or $100 a month to it, and they're just trying to play the catch-up game. So I basically Google searched and said, how long does it take to pay off a credit card? So it was interesting because I pulled up a couple facts. And this one was, it actually is a tool that you can go in and say, I have a $20,000 credit card bill and an 18% rate. And I'm just I can right now, all I can afford to do is pay the minimum monthly payment. How long would it take me to pay that off? Well, you go down through here, and it would take you 53.9 years to pay it off. And you'd pay $57,000 in interest. So again, 53 years. 53 years. I'm going to go to the next thing. This one says if you have a $10,000 debt, credit card at a 15% interest rate, it would take you paying the minimum monthly payments 28 years to pay it back. So do you get where I'm saying is I'm not looking to stretch this out any further for you, but if you're making the minimum payment, we look up two different variations. One takes 50 years to pay off. The next one takes almost 30 years to pay off. Don't forget those numbers. All right? So now what I want to do is go over what would be my interest rate if I'm looking to refinance. Let's see if this makes sense. How is Dan Frio, the Frio team's rates when it comes to doing a cash out refinance to consolidate my debt? All right, so that's my rate comparison for the day. So I plug in, I'm at Chase right now. And with Chase, I plug in all my parameters. And it was kind of hard to find this, but I was able to find it on Chase. And here's the URL. If you want to find that on there, I'm not making this up. I put in the data. I always run comparisons. Our average loan is about $250,000. So everything I work is a $250,000 loan. And in this case, I'm using a 75%, what we call loan to value. That is your loan amount divided by the value of the property. So in this case, I have a $200,000 current balance on the mortgage. I'm looking for $50,000 cash out to pay off a bunch of bills that I have, and my house is worth $345,000. If you do the numbers, if you add 200 and plus 50, it's 250 divided by a value of $345. Put your loan to value at 72%. Okay, so that's where we're at. When I hit get options, I get this. We don't have a product. So they don't have a product for you. I actually called Bank of America, and they actually said, because I couldn't find the rate on this is the assumption on this, I found their rates, 2.875 with 0.65 in points, but you look at the assumptions, and it comes down here saying this is a purchase. If you're looking to purchase a home. Well, I'm not looking to purchase a home. I'm looking to refinance and pull out cash. So I called them as well, and they will only do a cash out refinance if you're currently a Bank of America member or loan, have a loan there with them now, a mortgage. All right. So the next thing I come up with is PennyMac. And these are, I just Google searched and was just looking all over the place to try to find rates. When I pull their rates on a today's cash out refinance, the rate is 3.49. That's the rate. Now, always remember to look at the assumptions. So view the assumptions. First mortgage, prepayment penalty, none. Single family home, 740 credit score. That's what we're using. Discount points, 2 points. Yikes! 2 points. So we got 3.49 plus 2 points. Okay? So remember, Bank of America, nothing. Chase, nothing. Wells Fargo, nothing. Whatever this place is, PennyMac, 3.49 plus 2 points. Guys, the 2 points is 2% of your loan amount, is a fee just to get that rate. That's not all their fees. That's just a fee for that particular rate. So that would be a $5,000 charge to get that rate, plus all their other fees. Okay? So now I went to guaranteed rate. This is a big we have big competition with them in the Chicagoland area, and I plugged in the parameters. I'm going to try to fit this in here because I always seem to miss this. But we have a property value at 340, loan amount remaining balance of 200, cash out of 50,000. So again, that's 200 plus 50, 250 divided by 340 puts us at that. Blah, 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 blah. Go through, and their rate on a 30-year fixed is 4.375. Okay? Now let's go to me. I'm going to plug my numbers in. So we want a $250,000 loan, remember that, with a $340,000 value. Oh, I need one more zero. Right? 250,000 with a $340,000 value. Over here, I'm going to try to blow this up as much as I can. We're looking at cashing out with a 740 credit score. I live on the street of M. My property city is M. My Illinois is this one. It's already prompted to Illinois. Going through and just putting in a zip code. The state and everything, we do not have adjustments per states and counties and everything. Our rate is, if you fit in one, you fit in all. All right, so that's my parameters. I'm looking for a conventional conforming 30-year fixed rate. I go down through. Let's see where I am at for today. And I'm going to break this down so everybody understands. Right here it says, this is my conforming 30-year fixed rate. I'm going to click it. Now it's going to give you a complete breakdown of this rate. I'm going to hit a 30-day rate lock. All right, so now what these numbers mean is this is the interest rate you could get. All right, over here is any points that you're looking to pay. Remember when we were back at, I forget what it was, Chase or Bank of America. One of them, it was going to be 2 points to get that rate. I forget where it was. I think it was here. I'm not sure. But they were charging you 2 points. You probably remember. It wasn't that long ago. So the best rate out there right now, guaranteed rate, is at 4.375. There was somebody at 3 point, oh, right here. PennyMac had 3.49 plus 2 points. That was the best one out here because nobody else will even do cash out refinances or debt consolidation loans right now. I am at, and here's how you read this. Here's the rate, all right? Over here is any points or rebates you would get back, and it goes through a number here. So let me make sense of this. Right here, let's look at this number right here. Almost all cases, I give people at least $400 to $500 credit back. So in my case, you would be at 3.125. It would cost you 0.174 in points, which equates out to $438. So in this case, if you're looking to do this loan, I will give you a $450 credit to make this zero. So I have 3.125, and it doesn't cost you anything to get that rate. Okay, there are some other additional fees involved, but no points or anything for that rate. The closest competition was 3.49, so basically 3.5, charging you 2 points, which equates out to $5,000. Okay, I would give you in that case a $1,400 rebate check at basically that same rate. They're charging you $5,000. So the difference is I'm giving you a rebate of $1,400. They're charging you $5,000. So $6,500 would be the difference, the savings you would have with me versus them. Guys, that's all I got to go through for today. I won't go through rates today with you because I just want to get you on and off of this thing fast. So what you might think of now is, Dan, I like what you got. What do? I already got a quote from this place. Send me the quote. I haven't started anything yet, but I really want to do this. Go online. I'm going to show you that here in a second, and let's get the ball rolling. Don't wait any longer. Take advantage of these rates while they're here. What's going to take effect in the next couple weeks? Got the election coming, guys. That could have a huge impact on rates. We got the coronavirus. We got stimulus packages going through or not going through. There's a lot of uncertainty right now. Rates can have a tendency right now to really fluctuate. So let's look at some numbers and let's see where those put you. So how do you do, or what do you need to do to reach out to us so we can get the ball rolling for you? Well, my name is Dan Frio. It's DANFRIO. My email address is dfrio@preferredrate.com. But one of the best ways to do this is to go to my website. It's therateupdate.com. And apply now or get a free quote. Those will get you rolling. You can give us a call. We have an 800 number. It's 844-775-LOAN. That's 844-775-5626. Or email me at D, again for Dan, Frio, that's Frio, at preferredrate.com. Here's what I ask again, is if you're in the process right now of getting a mortgage, the lender, even if it's me or anybody else, we have to give you what's called a loan estimate or a fee sheet. Email me the fee sheet you have from the current lender that you have. It has to be pretty recent because mortgage rates tend to fluctuate. They've been fluctuating like you saw today. We had a rate lock alert at noon and we were down 16 and we ended the day only down 5. So we had a price adjustment during the day for the better. So it depends. I can't take a quote that you got 3, 4, 5 days ago because it's irrelevant. It's not apples to apples. So send me the loan estimate you have. I'll write all over it in red pen and get back to you saying, here's what I can or can't do. Probably 99% of the time I'm lowering your rate than you're getting from another competitor, or I'm lowering your fees with the same rate, or in many cases, I'm giving you a lower rate and lower fees. If you haven't started yet, go to the website. Just make a few clicks. If you don't get a hold of me, I do review every file. I review it to make sure you're in the right program, you're in the right rate, you're in the right cost structure, and we lock you in at the right time. Those are huge. The biggest thing that I want to educate everybody is the fees. What I want to look at is what fees are you paying for that particular rate? I had somebody today come back and say, Dan, I'm getting a 2.625 rate and you're at 3. It was costing them almost $10,000. I'm like, why would you pay $10,000 to get a loan? You're trying to refinance, to a lower rate to save money, and you're going to pay $10,000. Just keep the loan you got, and because you're going to probably pay $10,000 anyways. So I hope you get what I mean. So that is it for today. I hope you like what you see. Please give us a thumbs up. I'm trying to build, the next milestone is hit 15,000 subscribers. We hit 10,000 about 2 weeks ago. Thank you guys for that. And hope you like our new video that we just put together to introduce you to the team. Other than that, God bless. Take care. Be safe. Be happy. And if we can be of any help, please reach out. Either email me or give us a call or apply online. Have a great night. I'll see you guys tomorrow. Bye-bye.